So welcome back. It's the final panel session of the day. Thank you to the panelists and the chair for our previous session. That was fascinating. We're now going to turn to look at the banking and fintech sector. As you probably know, the UK has cemented a very strong reputation for innovation when it comes to financial services. In fact, total UK fintech investment last year was $38 billion, up sevenfold from the previous year. So fintech investability is clear, as is its strategic importance. So what expertise can be shared with a rapidly developing Arab fintech sector? Well, the chair of our next panel is Stefano Falciani, Strategic Projects and International Development Advisor at the Institute of Export and International Trade. This is a professional body that empowers organizations and individuals to train competitively and sustainably. So please welcome Stefano.
Thank you very much. Ladies and gentlemen and distinguished guests, it's a pleasure for me to be here to moderate this panel with such a great bunch of people like Andrew Elia, MD at Arishi, Nasser, Saleh, Chairman at MadfooatCom, and Khizar, Arif, partner at Giambrone and Partners, and Smyth, Director at P.S.C. Now, my name is Stefano Falciani. I am part of the strategic project in the international development team at the Institute of Export. Now, before asking to the other panelists to introduce themselves and introduce the organization they belong to, please allow me to spend a few words, a couple of minutes to introduce the Institute of Export and International Trade. The Institute of Export has been established in 1935 as a charity. Can you go to the first slide, please? Okay. As a charity, the institutional purpose of the Institute is to enhance UK export performance and professionalize those involved in the international trade through training and education in UK and globally. The Institute of Export is the leading international body for businesses and individuals trading internationally. At the moment, we have more than 7,000 members, businesses, mainly SMEs, and individuals, representing the complete supply chain, from manufacturing to logistics. And you can see here how the membership is composed in terms of verticals. We are employing at the moment 150 plus staff, and we operate through 5 offices: London, Peterborough, Bangor in Northern Ireland, and Nairobi and Brussels. And now, how do we do that? We do a lot of training and education, as you can imagine. We set up a networking event, advocacy, consultancy, cooperation with UK and overseas governments and supranational entities, such as WTO and ICC. Our training and qualification offer is very wide. We deliver the training and qualification under 3 brands: Institute of Export International Trade, Open to Export, and Customs Academy. The kind of training ranges from custom procedure courses, documentation for customs, sanitary and phytosanitary controls, and so on. And as for the qualification, for example, we provide qualification courses up to level 5, like the degree, foundation degree in international trade in collaboration with Plymouth University, and international trade strategy and operation master done in collaboration with Warwick University. As for me, after 10 years trading government bonds and rate derivatives, I started and established the operation of 2 UK subsidiaries of 2 big fintech groups. Now, before leaving the stage at my colleagues here, let me spend a few more words. Can you go to the, oh, that's not the right one. Okay, no worries. A few words regarding some of the main challenges that are reported to us by our members. Most of our members tell us that trade finance is still stuck with legacy system, processes, and procedures that make it for them difficult to operate internationally and keep draining them directly or indirectly resources. Now, the technology to overcome some of this problem is available. Distributed ledger technology is, for example, what we are currently using to set up some digital trade corridor. We are currently running some pilot projects where we are following some goods from Africa, from Central Asia, from Australia, coming to UK. And we are dematerializing completely the international trade process. So there is no more paper documentation that is needed. Imagine that we were counting more than 140 paper documents just to send some coffee beans from Kenya to UK, which is an amazing number of documents. So this technology and the platform that we are working on, that is called, with a lot of fantasy, I must admit, TLIP, Transport Logistic Information Platform, reduce dramatically the time to get through customs. And in the close future, with the usage of smart contract, could also enable the UK trade finance and trade finance in general to assist much, much better the international trade activities. So now, please, let me introduce the next, leave the stage at the next panelist, Mr. Liam Smyth, Director of British Chamber of Commerce. Please, can you introduce yourself?
Thank you. Thank you very much, Stefano. And so by way of quick introduction, I guess, would be to say that I'm Director of International Trade at the British Chambers of Commerce. Of course, British Chambers are one of a number of national chamber bodies from across the world, not least of all our friends in the Arab Chambers of Commerce and those in North Africa and in other regions, through our work and engagement at the International Chambers of Commerce based in Paris. And so we have many friends in the Arab world. We are a national chamber in the UK made up of 53 accredited chambers of commerce in the major cities of the United Kingdom and in all of the nations of the United Kingdom, and also 76 British international chambers of commerce that extend around the globe and in every continent. Of course, I should say that in the UK, we're also a very close partner of the Arab British Chamber of Commerce, our hosts, and I want to thank them for inviting us to participate at this event today. Just to spend a few moments talking about the way that chambers of commerce in the UK and British chambers help to facilitate trade. We do this in a very practical way. And so one of the very practical ways we help UK traders, in particular in trading goods into the Gulf Cooperation Council countries and others, is through the issuance of certificates of origin. And you'll see in the brochure for today's event, indeed, an advert for the Arab British Certificate of Origin, and we act through our chamber network in the UK as agents on behalf of ABCC to issue those certificates, where they are required in the country of destination. So that's everything from defence equipment to Bentley motor cars, Land Rover vehicles, and many other things in between that go from the UK into those countries. And we have a team of people around the UK who are expert on that thing that is called rules of origin. As well as that, those non-preferential certificates of origin that we issue, we also issue something called EUR1 preference certificates. And we do this on behalf of the Customs Authority in the UK, HMRC. We act as their offices around the UK. And they apply where a trade agreement exists. And of course, you'll have heard earlier from our chief negotiator in the UK and also colleagues in the other side of the negotiating table in the Arab world talking about the potential for a free trade agreement between the UK and Gulf Cooperation Council countries, something that we look forward to and hope will be concluded to the satisfaction of all, and that will facilitate and liberalise the movement of people, trade and services between our respective locations. And we act as some degree a consultee, not on the negotiations, but certainly we act as a sounding board for our colleagues in government here in the form and state of those agreements that they are trying to reach. And what we also do and can facilitate, of course, is the discussions we have with national chamber bodies in the GCC countries about the concerns that we may have in the negotiations or the hope that we have for a good resolution on that agreement. Now, just to say something about the trade, the state of trade between the UK and Arab countries right now, we know from insights that we get through our research that how important the region is to businesses in the UK. I think particularly about the automotive sector. I've mentioned Bentley and other manufacturers that would be obvious to you, but also in the defence sector, which is well known, a growing professional services sector into the region, some very well established and some emerging. And of course, a very more historic, if you like, relationship, particularly around the extraction of oil, gas and carbon, and the relationship that's existed between our two countries, and for many SMEs engaging in the Arab world in partnership with colleagues there over many decades, and the importance of that remains today as the energy crisis we're seeing right now means that we must continue to work together to serve our energy needs going forward. That may not be a very popular thing to say, given that COP27 is about round the corner, but for me anyway, it's just a reality of where we are right now. Finally, before I pass on to colleagues, I wanted to mention our research and insights at the British Chamber. We're regarded by Bank of England, by government and others as being a sound source of insights, not about what's happened in the past necessarily. We know what's happened in the past, it's evident, but actually about business sentiment and what businesses are saying to us today about what they think the future holds. And it may be that in between now and the end of this session, I get to share some of those insights, but we do a quarterly economic survey of businesses and a regular international trade outlook survey and trade confidence survey. And so we have some very interesting insights about where the economy is now, where business sentiment is in terms of investment for future, and what markets businesses see as holding the best opportunity or where they expect to invest in the months and years ahead. I'll end it there for now. Thank you very much.
Thank you very much, Liam. Andrew, the stage is yours.
Thank you. My slides, please. Thank you. Good afternoon, everyone. Just to frame some of the conversation that we're going to have on the panel, with my esteemed colleagues shortly. I just wanted to give you just a few topics to see that conversation. So we're an end-to-end technology company, and so we've seen and implemented quite a few fintech-based platforms over the years. So I'm going to give you a few insights, or as I like to call them, the cynic's guide to fintech. So next slide, please. So just before that, a little bit of background on us. So we've been around since 2002, so we've seen quite a lot in our time, and we work with a variety of different shapes and sizes of companies across 5 different continents, including the Middle East, of course. And we focus very much on high-end software delivery rather than the sort of more commoditized sort that you tend to see in the market. So we're quite niche in that area. And we've been working in the Middle East since about 2018, and we set up our own presence there in 2020. We're based in Abu Dhabi on Al Maria Island. Thank you. And this is some of the stuff we do. By all means, come and find myself and my colleagues, or come to our stand downstairs if you want to know more about that. And so, onto the sort of topics that we want to talk about. So, very often with fintech, we tend to see that people tend to chase the sort of bright, shiny lights. And sometimes we'd suggest maybe taking a step back and taking things a little bit slower and make more strategic decisions based on tried and tested, not necessarily bleeding edge technologies, because sometimes you can come unstuck very rapidly. And that leads on to technology fashion. We have a number of buzzwords that we come across over the entire time we've been around, and fintech has no shortage of buzzwords that people tend to chase after. So again, beware of just chasing technology for the sake of technology. Look at what you're trying to achieve commercially, and then get the technology in to support that. And like many people in the tech sector, I'm always very excited about technology, but ask yourself, are you actually looking to develop a business using technology, or are you trying to build a business around technologies that you find fun? So, again, a slightly cynical point of view, but we've seen people who haven't necessarily come off well from doing the former. But making sure that when you innovate and you choose the right sort of technologies and you use the right sort of innovation, that's where you can get your competitive edge. And that's the sort of thing that excites investors. That's the sort of thing that, if you're looking at B2C, that's the sort of thing that brings you customers. And these all sound quite generic, but they're all leading on to more of our discussions later. So one of the topics that I just want to touch on, open APIs. They're seen as a sort of panacea of taking financial institutions, banks and so on, from some of the sort of paper-based, like, dark ages type processes and so on that they had into the modern world. The reality is that it's not simple as flicking a switch and saying, let's turn an API, everyone can then connect to us and everything's good. The reality is a lot of these institutions have legacy systems, and bringing those forward into open APIs isn't just a trivial process. There's a lot of work that goes beyond behind the scenes, and there's a significant time to market that comes to that as well. So that's something that I think a lot of people tend to overlook. And as a result of that, there's still a lot of processes, and not just in terms of the use of technology, but in terms of how people are wired and what they're expecting. So you still see some processes that are based on wet signatures. So I often have to smirk when I've seen people who say, you can fill in this application online. You fill it in online, and effectively all it does is tell someone in the back room somewhere to print something out and put it in the post, and then get you to sign it. Well, surely, these sort of things should be consigned to history, but the reality is it's still happening now. And likewise, with KYC and fraud detection, it's an exciting area, but there's still a lot of guesswork involved. And we've seen where KYC can get things completely wrong and either let fraudulent transactions and basically people through the net, but then block people who are completely innocent. And so there's been, unfortunately, some negative press about some very well-known people in the KYC sector, because a lot of what they're doing, the data that they're looking at, is often based on inference and from not looking at credible sources. And so there's an old computing term which is garbage in, garbage out. And however much you have the most amazing technology, if the data that you're basing it on is no good, then the output's going to be no good. Now, one thing that we also tend to see, and there's been some very public examples of security vulnerabilities and issues in this sort of sector, is over-reliance on unchecked open source solutions. So open source is a great way of accelerating technical development. There are libraries that save people an awful lot of time, but sometimes people blindly integrate these systems in there. There are obviously license implications and that sort of thing that come about from that. But more critically, there are security vulnerabilities that we see with things that CISA and various other security organizations will highlight, that putting some of these technologies into your platform and then later finding that you're completely vulnerable and your data can be exposed without you even knowing about it, they're just extra levels of due diligence that should be done here. And one of the other things that we've observed a lot with quite well-known fintech applications is that they tend to ask for forgiveness rather than permission. Now, there's a reason why there's structures and standards bodies in place, and yes, they do slow down adoption and things like that, but very often sort of regulatory breaches are from the sort of companies who say, we're going to revolutionize the market, we're going to disrupt it. All those things are great, but the fundamental issue is that if they break the rules while doing it, there's a reason why those rules exist. Next slide, please. So AI is another great buzzword that everyone likes. But what we see so often is when people say they want to implement AI or have already implemented AI into their solutions, a lot of the AI that people talk about, it's not actually AI. Just a simple yes-no decision that's going on under the bonnet doesn't qualify as AI. So there's quite a bit of snake oil in the market, and very often you'll see that people just tend to badge it with AI because it's great for marketing. And leading on to that, because people are so keen to say it's powered by AI and that sort of thing, actually, and this comes back to some of my earlier points as well, do you really need AI for a particular application? What exactly is it you're taking into your system, and what's actually your output? Do you really need AI for that purpose? And I won't go into all the details and the technicalities of where AI would be applicable, but just have a bit of food for thought about, is AI really critical to what it is you're trying to do? So then again, the people who have used AI in their platform, and they're all too keen to say, right, we're throwing all this over to AI because our system's going to be really clever. We've justified to our investors that it's AI, so we don't need loads of people to crank the handle and that sort of thing. But what tends to happen is that people just throw all their data into the system, and then the number 42 comes out of the black box at the end of it, and then sometimes people just don't understand how they got to that number. And in some cases, when the AI isn't properly built and you end up with the wrong answer, how do you unpick that? How do you understand where you got from those inputs to that output? So there's another buzzword that everyone's using now to try and get around that called explainable AI, and it is something that's particularly important when you're basically outsourcing your decision-making process to a machine. And the idea is that you need to be able to trace back that answer to all the decisions that actually led to it. So certainly if you're going to look at an AI solution for any of the sort of things you're doing, make sure you have a route to explain why you came from here to there. And with that, questions will come when we have the panel. So thank you very much indeed.
Thank you, Andrew. And I take the Arishi story as a story of success, of cooperation between the UK technological sector and the Arab countries' technological sector. So very interesting. Thank you very much. Nasser, the stage is yours to introduce yourself and your company. And this is another success story in the fintech and banking sector.
Thank you. My name is Nasser Saleh. I'm a founder of a company called MadfooatCom. MadfooatCom, actually, it's an Arabic word. It means your payments. We are a fintech company established in 2011 in Jordan to disrupt cash payments in Jordan and the emerging markets. So in my country and many other Arab countries, Middle East, North Africa, people like to pay in cash. So we have a high percentage of cash payments compared to credit card payments. People don't like to use credit cards, or they don't have even access to credit cards. That's why we created a platform. We called it MadfooatCom, ePayments. That platform actually connects banks and payment service providers to billers and merchants to enable the end customers to inquire and pay any type of payment. So we started that service in 2011. We were lucky. We convinced the Central Bank of Jordan to adopt this service, and we became the national service provider for the country in 2014. So we connected all banks and payment service providers to hundreds of billers, both government and private sectors. That really enabled the e-government service in Jordan and enabled even the other services for, or e-services for the private sector. So from that date till date, we processed more than 100 million bills with an amount of more than $55 billion. Those money or those payments used to be in cash. So now all of them are happening online real time. So it helped the economy, and also it increased the confidence with the e-payments in the country, and increased it was like the infrastructure for the e-government services. So basically our service depends more on debit payments. So we allow the customers to go to their online banking or any banking channel, inquire and pay from their direct accounts. And this protects their privacy, protects their card data, because they are not using their cards, they are using their channels or online banking channels that they trust and they know. Now we are expanding to other countries in the region. We expanded already to Oman, to Palestine. We are in the process to expand to Morocco and other countries. And we are introducing more fintech services, not only bill payments. So we are introducing mobile wallets. We are also introducing AI, like my colleague mentioned. We are analyzing all these data that we are collecting so that we can predict the customer behavior and provide some sort of credit scoring other than the normal credit scoring of the customers, because we know who's paying what and how much he's paying and when he's paying. Is he a regular payer? So this is also a very interesting area we are working on. Thank you.
Thank you, Nasser. Khizar, thank you very much for introducing yourself and your company. And I think you have a sort of success story to tell us as well.
Yes, absolutely.
You
Assalamu
like
alaikum,
positive
distinguished
messages.
guests. Thank you very much. Colleagues and friends, I'm Khizar, Giambrone and Partners. I'm a lawyer with over 20 years of experience. The firm handles cross-border dispute resolution and litigation. And the success story that I referred to is the landmark case of Elia that we have in cryptocurrency litigation, which I will come to in a moment. And I will also talk about security initiatives and data protection. The firm has a number of offices in Europe, in North Africa, South America, and works with affiliate offices across the world, and we're looking to set up an office in Dubai. Now, cryptocurrency is proven to be a game changer that has the potential to bring high rewards, but also is volatile. As you will know, cryptocurrency is a virtual asset. The legal regulatory status of cryptocurrencies, nevertheless, is considered to be varied from country to country. But you'd be interested to know that Dubai passed the first law designed to protect investors and set global standards to govern the virtual asset industry via the Dubai Virtual Asset Regulatory Authority to regulate, supervise and control virtual asset services. Other countries such as Cameroon, Kuwait and Zimbabwe, others like Algeria and China have absolute bans. One of the major stumbling blocks with crypto is the ease with which fraud aimed at both individuals and companies can be perpetrated. Giambrone has an instrumental initiative in developing a way to recover the money lost by victims of crypto fraud using technology unique to crypto. Now, the case concerns the fraud whereby persons unknown appropriated the virtual assets of the cryptocurrency of our client, and the question came whether whether documents could actually be served on persons unknown by way of non-fungible tokens. This was an innovative feature presented to the court, and the court held that yes, you could actually use this method of serving documents on persons unknown, as well as email. The court also found that platforms could be held liable as constructive trustees, which is a breakthrough for not only cryptocurrency regulation, I think, but also in terms of court procedure in developing this area. The court granted permission for Mr. Deloya to serve proceedings by way of NFT airdrop to the two wallets into which he initially deposited his cryptocurrency, as well as service by email, as I've said. And it also recognized that the 5 cryptocurrency exchange defendants held his identifiable cryptocurrency as constructive trustees. The immutable nature of NFT through blockchain ensures a bullseye ability to deliver the court papers unquestionably to the intended recipient, and crucially, even when they are persons unknown. Needless to say, the exchanges will be alert for an increase in claims for breach of trust in respect of misappropriated funds held on their platforms. Giambrone can help, therefore, not only customers and investors, but also institutions or banks which are involved in the transactions. Now, there are some security initiatives that English law has embraced. The Financial Conduct Authority is planning new stringent rules and regulations to ensure the vulnerable customers are supported and protected by financial institutions. There will be an obligation on institutions to act in good faith, avoid causing foreseeable harm to customers, enable support customers to pursue their financial objectives. The far greater focus is on identifying and protecting vulnerable customers. Now, the cautious Arabic countries, previously wary of the new developing crypto sector, may have more confidence in pushing forward into this new area. There may be factors that will affect the success or failure of any aspirations to leverage crypto technology in MENA, British and European fintech sectors. Finally, I will talk about very briefly on data protection and how it fits into blockchain technology's main features. The trouble is that the EU and the UK GDPR privacy laws do not actually deal with privacy on blockchain. So very briefly, in terms of data protection, this area of law is actually in the process of development. If you have any questions about cryptocurrency or litigation or cross-border litigation, my colleagues here will be able to help. By all means, come and speak with myself, and we can arrange a meeting if need be to discuss your case. If you have any questions, by all means, ask the panel, and thank you for your attention. Yeah.
Thank you, Khizar. Now, the first question that I have is for Nasser, Saleh. What I'm wondering is if it would be correct to say that the solution like your solutions or your company solution are widening the access to the banking services for the people in wherever in the world, also in the Arabic countries. And can you expand, please, when you say that you are not, fintech companies are not working in competition with banks, but are helping banks to integrate the service they provide?
Yeah, actually, you are totally right. Now, there was a misconception in the beginning that fintechs are coming to compete with banks. But what we saw that in many cases, I will talk mainly about Arab countries, and I think this is applicable to other countries, fintechs are cooperating with banks. And I'll give a good example of MadfooatCom, my company. When we started, some banks were talking to us that, okay, we are already introducing bill payment service, so you are coming to compete with us. We told them, no, as a bank, this is not your core business to integrate to tens or hundreds of billers and merchants. Your really business is to offer a good service for your customers. And consider us your fintech arm or business partner. Okay, they were not convinced in the beginning, but by time, they were convinced, and we really saved them a lot of money and time and a lot of operational work. Today, I'm very proud to say that in Jordan, we are connected to all banks, local and international banks, and they are working with us fully, with their full power. Because what happened, we introduced to their customers hundreds and thousands of really services that they could offer to their customers. So what we noticed, that increased the financial inclusion in the country. It widened really the access for the customers. And in Jordan, in the last few years, we jumped from 30% almost of bank customers to more than 50% of bank customers. Because the new customers were coming and opening banking accounts to access our service, because they want to pay online real time. They know that this service is available through banks. So they opened banking accounts. They used to pay in cash. So that was a very good, really, example of cooperation between banks and fintechs, which what happened in our case. Also, the customers were more confident, let's say, or comfortable to work with their banks, because they know banks are very safe. They protect their data, and it's a credible institution at the banks. So when fintechs work with banks, it's really helps the banks and helps themselves, because you are already getting the credibility of the banks.
Thank you. The second question, before arriving to the second question, what I wanted to share with you was a figure, that I was, I just touched before. That nowadays, every year, there are 28 billion paper documents that are circulating in the world. And the fact that we could, dramatically cut this paperwork, apart from the obvious that it would carry to less paper consumption, and from this point of view, a much higher sustainability of any activity, not in the case of what I was talking about before, in the case of international trade, could also, carry a boost into the economies of the country that start to become paperless. So the project that we are working on, of the digital trade corridor, we heard this morning about the free trade agreement that is going to be signed shortly, among Arabic countries and GCC and UK. This could carry a great advantage, a direct economic advantage worth more than £1 billion in 10 years,
And also an indirect advantage, because this could allow, as I said before, trade finance to assist much more accurately, all the actors that are involved in the international trade. Now, maybe this, together with the single trade window, meaning that is a single, let's say, point of access in a platform where you insert the data that you need to insert only once, not several times, and then from the servers behind you get the documents that you need to get. This could carry an enormous economic advantage. Now, Liam, do you want to expand regarding this?
Yes, I'd be very happy to, because this is an area that British Chambers are very engaged in, and in fact, through the International Chambers of Commerce, we've developed, or we're partnering with the IOE and other parties, the banks and others, on something called the Centre for Digital Trade Innovation. And this really is a public-private partnership in the UK to help government to work with the private sector to develop the fintech, to develop the digital solutions that will bring those liberalizations of trade, bring the efficiencies and bring the savings so that we don't have to do things 2 and 3 times. Now, critical to that working are things like legislation. So we don't have the legislative framework in the UK right now to facilitate some of the change that is required. Earlier, you talked about wet signatures as being a thing, and the movement of documents and pieces of paper. And this gentleman's shaking his head and says it's crazy. But you know, the legislation that exists in the UK and in some other countries means that if there's a letter of credit, the bank requires a wet signature document. Some Arab countries, for certificates of origin, still require a wet signature document, bizarrely, when a digitally signed certificate is much more robust and less open to fraud. And in fact, our certificates of origin, 95% of them, are only ever issued digitally and only become paper when a bank demands it or an embassy demands it. Outside of that, they don't have to exist in paper. They're totally auditable in a single data set that exists globally and can be checked by customs authorities in real time on a mobile device. So that's my way of saying, actually, in the private sector has been digital in large part for some years. The gap and what's slowing us down is the willingness of governments to adopt a digital solution, a single, consistent method of engaging with that digital solution. And it's interesting that you also talked about open APIs, because APIs are the method by which sets of digital data in one place can exchange with another system. It may be a blockchain system ultimately, it may not. I think that the security and cloud computing solutions are much higher now than they were 5, 6, 7 years ago when we first started, probably 10 years ago, when we first started talking about blockchain. And we haven't delivered significant blockchain solutions yet, certainly in international trade. So I think that the vision is a digital border. I know that's the vision in many of the Arab countries that are working towards Vision 2030 in Saudi Arabia, a single trader window. So the willingness is there at the World Trade Organization, at the World Customs Organization. The vision is there through the Trade Facilitation Agreement to make it happen. We need to make it happen because it will do that thing that Nasser's solution does. It liberalizes business. It liberalizes buying and selling. It liberalizes trade, and it brings people into a community. In your case, individuals, but also businesses, I suspect, as well, are using your app because that's what they do. We find an easy solution, we grab it, and we use it. And I think it's also interesting to hear the example of the non-fungible token delivery of an action against a bad actor in cryptocurrency. I think that also demonstrates that there isn't a panacea, safe, secure, a distributed ledger that no one can break and defraud people in. It will never exist. because the innovators will always, and the fraudulent people always try to be one stage ahead. So we need to get to a position where we can use digital in a constructive way to share trade data, to make money move around the globe much easier, and to make it socialized and accessible for parties wherever they happen to be. And I think that's a great future for us.
Yeah, and this is why there is we work around the concept like ecosystem of trust and enhanced
and a single source of truth, as we
exactly.
Single source.
Yeah, exactly. So talking about this, I was thinking about what you were saying, Andrew, regarding this shining light of technology, because even in this case, don't you think we need to be careful in the sense that we need to be careful not to translate what is now, let's say, in paper, just in something that is not in paper, and that's all, without instead rethinking completely how this should be done in order to become, let's say, a smoother process. What do you think about this?
Most definitely. So if effectively what you're doing is effectively keeping the same process, but just changing it from paper to digital, you're not really saving anything. So the whole point is that when you bring technology into it, you need to take a step back and think about what that process is and how technology has changed it, and then develop a new process around that. And all too often, I've seen what can happen when people just say, well, if we just do the same thing, but just rather than filling in a form on a piece of paper, we'll fill in a form on a website, and then the output's the same. But you're not really saving anything, because someone still needs to go through it manually and that sort of thing. And certainly, when we talk about governments and legislation and that sort of thing, something that I would say probably quite rarely that you could credit the British government with is the government digital service. So they've been rethinking how things just as simple as, and I know this is a left field example, of getting a passport and being able to verify a passport, where you had to scroll on the back of a passport photograph in teeny tiny letters, I certify that I've known this person for this length of time, before you run out of paper at the end of it. The fact that all of this now, someone has rethought how that works, and it's just a step-by-step process where you don't even have to be in the same room as someone. That's a great example of how that process has been rethought and digitized in a way that's more convenient. And that same paradigm can adapt to so many other processes in fintech.
Okay, thank you very much. And regarding, we have seen a lot of, so we have been discussing now of a lot of, let's say, solutions and that by sure are going to enhance digital cooperation, like the digital trade corridors and the green trade corridors that we were discussing. The solution of Mr. Nasser MadfooatCom is by sure widening the access to the banking services. And also in terms of sustainability and cybersecurity, what we discuss is by sure in line, no, with getting some goals. In terms of, my question to you, Khizar, is where are we in terms of legislation? I mean, is the legislation ready to support all this?
No, it's not, and that's the problem. There are discussions about it. I can't talk about developments in the fintech or the crypto sphere as such, but there are discussions about what is a proposal in the bills of trading, electronic bills of trading issue. So developments are very, very slow in terms of legislation.
Unfortunately. Just to jump in, the digital trade bill was planned to go through Parliament this year, given the circumstances of the UK government's latest government. It's now marked up as going through Parliament when time allows. So it's not on the there are other things that are deemed to be higher priority because trade is still happening, despite the fact that this would be we need that trade bill through Parliament in order to be able to move to those digital trade solutions and for parties at both ends of the trade and in the middle, the banks, the intermediaries, the insurance actors and so on, to be able to move to a new form of trading away from wet signatures on letters of credit, etc., and supporting documentation and so on.
Thank you. So thank you very much for your comments. Being conscious of time because I think we need to close. We may have the time maybe to take one or two questions from the audience, if there is any. Otherwise, I would close here.
Oh, there's one at the front here.
Good afternoon. I get to ask two questions in this conference. I asked one at the last panel. Bearing in mind the complexity of legislation that goes through, and it has to go through parliamentary process, is there any real prospect of lawmakers being able to really understand what they're voting on, either in England or elsewhere?
I mean, I would come in and say that so there are a number of parliamentary committees that specialise in international trade that do have people who understand the issues around the trade bill. There are cross-party committees. There are committees where the private sector is engaged as well. So I don't think there's an issue of understanding what's involved. And I say that because the UK at the World Trade Organization signed up to the Trade Facilitation Agreement, which is the global rules-based system and document that refers to that the UK has signed up for, and they know the digital trade bill is essential to making that happen. So I don't think there's an absence of understanding of what people are signing up for, and I can tell your civil servants are all over this and understand the need for it. It's finding the time in Parliament to have that bill go through both houses and into the law.
Thank you. Do you have any other question? No? So please join me thanking all the other panelists for the insightful comments. Thank you.